Michael Saylor just dropped a keynote that wasn't really a prediction, it was more like a briefing from the future. Today, we're going to break down his blueprint for how Bitcoin is shifting from just a speculative asset to the actual foundational infrastructure for global finance. It's a huge claim, so let's jump right in.
Okay, so let's start with his opening statement because it really sets the stage. This is not the usual pitch about digital gold or scarcity that we've all heard a million times. This is a flat-out declaration that the entire game has changed. What Saylor's saying is, look, the time for trying to convince people about Bitcoin, that's over. We're now in the era of how we actually rebuild the system with Bitcoin at its core.
And who's he having this new conversation with? Well, just take a look at this list. This talk wasn't for you and me, the retail crowd, or even the tech folks. This was aimed squarely at the architects of the global financial system. Right at the top, Saylor mentioned he just spent a week meeting with these exact kinds of groups all over the Middle East. So what you're about to hear isn't some pie-in-the-sky theory. It's basically a summary of conversations that are already happening in very, very important rooms.
So, for our first section, let's really dig into this main idea. Bitcoin's integration isn't some far-off possibility anymore. It's a transition that's underway right now, and that's a subtle but absolutely massive shift in thinking.
The confidence you hear in his voice throughout this entire keynote, it comes from this one simple idea. The train has already left the station. He's talking as if Bitcoin is already being woven into the fabric of the system, sitting underneath credit, money, banking, whether people realize it or not. The debate has officially moved out of the public square and into the boardrooms of the world's most powerful financial players.
Let's see how this whole thing builds. To really get the reorganization, you first have to understand how Saylor reframes Bitcoin's fundamental role in the economy. And for him, it's not about currency. It is all about capital.
Now, what I love about this slide is just how simple and elegant it is. Saylor isn't putting Bitcoin up against Visa or the US dollar. He's positioning it as a peer to gold, to real estate, and to the S&P 500. It's just the native, digital version of a base layer capital asset. And this reframing is absolutely critical because it lets the traditional finance world put Bitcoin into a box they already know and understand.
And right here, this is the catalyst for everything. This is the green light for the whole world. The United States, which is without a doubt the most important financial regulator on the planet, has essentially given its blessing by calling Bitcoin a digital commodity. It's like digital gold, and that clarity is everything. Because when the US banking and securities markets make a move, that move tends to ripple out globally. This isn't just a small update. Saylor calls this the key inflection point that unlocks everything else.
So, here's the crucial next step. An asset is one thing, right? But financial infrastructure is something else entirely. And the bridge between the two, it's the ability to create credit. This is the moment where Bitcoin transforms from just a passive thing you hold into an active, structural piece of the entire economy.
And this table just perfectly illustrates the two layers of the financial world. You've got capital on one side. It's volatile. It's for long-term growth. But let's be real, the world doesn't run on volatile capital. It runs on credit. It runs on stable, predictable, income-generating things like loans and mortgages. Most of the money in the world needs predictability, not heart-stopping price swings. So the whole game becomes, how do you use volatile capital to create stable credits?
Yeah, how do we know this works? Because we've seen this movie before. Gold didn't become the foundation of the modern financial system because people were passing around physical coins. No way. It shaped the system because for centuries, the entire world built its credit infrastructure on top of it. Gold was the capital, the bedrock, but the loans and the notes built on it were what everyone actually used day to day. Gold basically became invisible, embedded deep inside global finance.
And right there, that's the core of the entire argument. Saylor isn't pitching some radical new idea. He's just pointing to a historical pattern and saying, hey, you see this? It's happening again. But this time, it's with a new and frankly superior digital base layer. If Bitcoin really is digital gold, then creating digital, Bitcoin-backed credit isn't just a logical next step, it's probably inevitable.
Okay, so that's the big picture theory. Now let's get into how MicroStrategy is actually doing this. They're not just sitting on a pile of Bitcoin. They are actively building the financial machinery to turn it into useful, productive tools.
This is their playbook, step by step. First, they buy up massive amounts of Bitcoin, basically pulling it out of the market. Then, and this is the really clever part, they use it as over-collateralization. What that means is they might put up, say, $2 or $3 worth of Bitcoin for every $1 of credit they create. By doing that, they can completely absorb the price swings, protecting the person holding the credit and creating a totally stable instrument. The crazy long-term upside stays with the equity, but the credit becomes this predictable, boring, yield-bearing tool.
And here it is, the proof of concept in the wild. Saylor talks about this instrument they've created called Stretch. It's not a bond. It's short-term digital credit. And its job is super simple. Be a low volatility tool that pays you a yield every single month. This is the real-world application of turning that wild, volatile Bitcoin capital into stable, usable credit.
So the big question is anybody actually using this stuff? Well, this chart is just staggering. If you look at similar traditional instruments, they might trade about $100,000 a day. Stretch, on the other hand, is already trading over $100 million a day. That's 1,000 times more liquid. This isn't just a few speculators playing around. This points to massive institutional demand for this brand new form of digital credit.
All right, let's get to the final piece of this puzzle, because this isn't just a corporate strategy. Saylor's vision scales all the way up to the sovereign level. This is his actual pitch for how this new financial layer gets wired into the global system.
And here it is, the direct playbook he is presenting to entire nations. Step 1. Your sovereign wealth funds need to hold all 3 layers: the base digital capital, which is Bitcoin, the stable digital credit, like Stretch, and the equity. Step 2. Your regulated banks need to build the pipes to hold Bitcoin and lend against it. And step 3. You need to compete to become a global hub for this new kind of digital money. Stable, yield-bearing instruments that are way better than just holding cash that earns 0.
And this quote right here, this is the endgame. The argument isn't about politics or ideology, it's pure pragmatism. Saylor is basically saying that the nations that build this architecture first won't have to convince anyone to come. The capital will just flow there on its own, because capital is like water. It always finds the path of least resistance, always searching for the best mix of yield, safety, and scale.
And that really brings us to the final massive question. This isn't just about a new asset anymore. This is about a potential reordering of the entire global financial map. The race is officially on, not to mine the most Bitcoin, but to build the smartest, most attractive financial system on top of it. It really makes you wonder which countries are going to be bold enough to lead this charge, and which ones are going to be left playing catch-up.
Don't forget to subscribe, and thanks for watching.